And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It is time for the Market Prep Monday, April the 3rd. My name is John Hoagland. Thanks for trusting me with your time this morning. As always, our focus is accurate context, good risk management, and patience in our trading. Hope you like the new bookcase I put up behind me here. It's a good look, I think. I don't know, but at least I got a place to put all my stuff. It's good to see everyone this morning. I hope you had a nice weekend. If you're already in the markets, I hope things are going your way already. We've certainly seen some movement in the crude oil markets here this morning. We're always looking for information when it comes to that. And, crude prices have lurched to the upside this morning on a surprise OPEC cut, 1.1 some million barrel day cut starting in May through the end of the year. So a big shock to the crude oil market here this morning and last night. We're still waiting for some economic numbers this morning. And, for this week, we've got kind of bookends for economic numbers. We've got the PMI final here this morning at 8:45 Central, 9 o'clock, the ISM Manufacturing Index and construction spending. These are the second one there is going to be pretty closely watched. If it comes in hot, if it comes in weak, there's going to be some changes in the marketplace and the expectations again for changes in inflation, right? So we'll be watching those very carefully. As far as the rest of the week, we do have factory orders and job opens and labor turnover tomorrow, not expected to be wildly impacted. We do have a couple of talking Feds through the week, namely Meester on Tuesday. Wednesday, of course, ADP employment report is early this week. Well, not early, I should say. We do have a holiday on Friday. It's Good Friday, so markets will be abbreviated on Friday. So Wednesday, ADP employment report, international trade in goods and services, and the ISM services index on Wednesday, along with the petroleum status report on Wednesday. Thursday, jobless claims. As usual, we do have a talking Fed already on the schedule for Thursday. James Bullard is going to be speaking. And of course, we have the EIA natural gas report. And then Friday, unemployment, the employment situation due out 7:30 a.m. on Friday on a holiday trading day, abbreviated trading day on Friday with unemployment. Don't tell me that there may not be some additional volatility, low liquidity on Friday for that number, unemployment on Friday. So we've got our tasks set out for us. Hopefully you've done your homework. I'm happy you're here helping with the homework here, and we're going to get into it and see what we've got going on. We've got U.S. stock indices mixed this morning. We got the NASDAQ down over 100. We got the Dow up over 100. We got the E-mini S&P down 4.5, 5 points. A little mixed information. It's going to be an interesting and challenging weekend, I believe, in the equities. We've had some pretty good emotional moves to the upside. Volume, okay. Open interest, yeah, we've seen some buying coming in. We're just wondering if we've come a little bit too far too fast. We're going to see this all on the charts here very shortly. So again, investors are, I think, very, very thirsty for new information as far as rates and inflation are concerned. Again, we may see some of that information today. VIX this morning is up about 5%, still under 20 though, 1972. Not too far from where it was on Friday at this time. It was 1919, so up a little bit. 5% seems like a lot. The dollar index down 102.37 right now. It was 102.43 this time last week, or last Friday, I should say. And the yield on the 10-year down slightly. It's at 3.51%, 3.53% on Friday. So nothing major as far as changes in those things are concerned. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Subscribe to our YouTube channel so you can get notified when we do go live. And I'm going to say good morning to everybody. Henry G, first in the room. Jason, good morning. Shaw, good morning. George, George. We got Lacey, the center of the universe. My son is home from work today. He got home on a flight late last night from Texas. So he's taking the day off. He's wrangling Lacey as we speak. My brother Rick, good morning. Love you. John, good morning. Rusty Golfer, my spirit animal. Bill Phillips, Christopher, Timothy, Snowflake, John, Sarah Hall, prayers and love to you as always as well. Brian, Andy, good morning. Back from vacation and ready to trade. Welcome back, Andy. Vince, good to see you. Tim, Dr. VJ, we're wishing everybody a super week. Aren't we all, right? Trading Research, Shy. Good morning, Scott Saw, and he conquered. Anissa, good morning. Vince, liking the new look. Henry, good. Good morning, Sia. Alejandro, good morning. Excellent, Sarah. Glad you like the new look. Will, I think 3 countries unilaterally cut production. Saudi Arabia, UAE, and Kuwait. That means others could join for further cuts. Yeah, and that's not good in a lot of ways. Of course, we don't need that for inflation, but we also don't need more expensive crude for certain countries to profit for wars. Bagel Matters, good morning. Stocks COVID, good to see you. Shaw, digging the bear and the bull on the shelf. Yeah, those were my dad's. I actually broke the horn off of one when I was a little kid, and I still have it. Good morning, Jay Dimitar Rooster. Good morning, crowing to you. Open interest is in the play this morning or this week. Yes, it is. Grounds Hero, Fred. Good morning. And we are looking at Monday here. Monday is group coaching. There is the link to join group coaching. And here is the link to join Make Hogue Money this afternoon. So group coaching is at 12:30 Central. Make Hogue Money at 2 o'clock Central. And we'll see if we can squeeze in a reflection at the end of the day as well. So we look forward to seeing everybody there. If you are, not going to, if you don't want to get into the Zoom meeting for Make Hogue Money, you can watch it on YouTube. There's a little bit of a delay for the decision making on that, but of course, everybody is willing and is welcome to join us for Make Hogue Money, and of course group coaching and all of the things that we do here. So again, it's good to see everybody. It's good to be back with everybody. Worked hard on getting this bookcase up here and all put together and everything. So, and again, I think it looks pretty good. And again, need a place to put all that stuff. Excellent, Fred. Good. I'm glad you're liking it. So we may change a few things here and there, but it's a first good start, I think, with that with the bookcase. So, okay. Well, we are looking at these equities and in a little bit of a mixed state this morning. We're going to jump into the charts here and see what we are looking like here. Morning, Bluebell, giving kisses. Thank you, Bluebell. And Andy, glad you like the new look. David, nice and professional. Good. That's the look I was going for. All right. Thank you all very much. Sonny, Marcelo, good to see you. All right, let's jump in. Here's the S&Ps, the daily. We've got 3 up weeks in a row in the S&Ps. Not so much in the Dow, I think, but yes, in the NASDAQ. We really accelerated to the upside last week, and there's a little bit of concern in that. I think that there is the possibility, without some new business coming in, that we've come a little too far too fast, and a pullback would actually be healthier towards an upside move than just continuing this ballistic move to the upside, at least in the S&Ps. Now, we did add open interest on Friday, estimated 34,000. So, they always used to say, never fade an upside move on a Friday. And boy, that was true on Friday. The market just continued to roll over shorts all the way up. And we did add open interest. So there's still money coming in. And there's a lot of money on the side. Don't kid yourself. This thing could just continue to roll higher if there's no bad news. We saw volume maintain on Friday, open interest maintained on Friday. It was an emotional upside week, and there's some kind of concerning downside weaknesses that we're going to take a look at now on the 30-minute chart. So this was last week. Last week's low was a week low. Then we have a gap. We leave the point of control. We have a gap. We leave the gap. We leave the point of control. We close the gap to the tick, which is not necessarily strong here. We leave the point of control, and we fail to close the gap here, and we just continue this route to the upside. So what I'm thinking is there's going to be some key levels for the market to be able to hold if we're going to continue this move to the upside. And I think these levels are really close to where we are now. Looking at this 30-minute chart, we've pointed out all the kind of structural weaknesses down below, and those are going to be important when they become important. I think if we fail to hold the kind of right around the overnight low here, if we can't hold above that, if we re-accept back below that level, then I can see us coming back and cleaning up some of the weaknesses down below here. If we get too deep down below that, then something else has happened, and we're looking at a completely new market state. But I'm not thinking that that's necessarily going to happen without some sort of unexpected news. So, we do have what I'm calling a late spike. The base of it here is 41.22. We're going to go on to the TPO charts because you're going to see a little bit easier on where some of these weaknesses are. Is this the one? No, this is the one. All right, so this is regular trading hour session only. TPO charts. So the market really was kind of somewhat range bound in a double distribution trend day here on Friday. The move to the upside that occurred late in the session, I'm calling a late spike. So that late spike base is 41.22. Look at our overnight low, 41.2275. It's a low volume node. It is where the market left balance and continued to push higher without the benefit of time telling us that it's accepting, and it looks like we're going to be opening above that level. So we've got 41.22 as the base of the late spike. If we accept back below that, then I can certainly see us come back down at least towards 41.10, which was last week's weekly kickoff high. If we fail to hold there, this low volume node, this single TPO area here, then I think we might start looking towards kind of cleaning up some of the unfinished business. If you look at what's unfinished business, well, this is an incomplete downside auction. This is also an incomplete downside auction. We left a lot of unfinished, uncovered technical spaces here as well. We've got, the points of control all week down were unchecked, or all week up, I should say, were unchecked. We closed the gap here to the tick. That's not necessarily a strong signal. Exactness indicates weakness. We've got a gap that went unfilled below in a week low, and then down to another week low. So I'm looking for the market to really hold above last week's weekly kickoff high, 41.10, to look for opportunities to buy weakness. If it does not hold those levels, then I'm going to be patient and look for the market to give me some new information. It's really kind of hypothesis number one this morning, is to see these levels hold either here or here, and for us to continue this move to the upside. Now, we do have new information coming out. We have, hang on a second here. So we are looking for, let's see, manufacturing PMI. We're looking for it to be a little higher than the last one. We're looking at 49.3. ISM manufacturing employment, we're looking at right at 50. Both of them are expected to be higher. If they come out much different than that, then it's going to be a little strange. ISM manufacturing PMI for March, 47.5, a little lower than the last release. So some mixed information's kind of spilling into the marketplace here. All right. So, yeah, it's going to be an interesting day, an interesting week. Take a look at the crude oil now. So we had our triangle formation, or pennant formation, break to the downside, come back. Now Friday we came back into that channel, into that triangle. Now it look where we are. We're now above it. Drastic fundamental change brings drastic technical change. Are we going to see continuation above this level? It all depends on acceptance. Okay, so right now, I mean, the overnight is right where it started. There's no real overnight inventory here. So if with price moving through this, gapping higher in the overnight and holding above this trend line, I'm thinking of starting to look for opportunities to buy weakness. Here's the 30-minute chart. So there's our gap, our weekly kickoff high, which was, done before this new information come out, was, let's see here, 77.50. Well, it may end up actually being supportive now. So no overnight inventory. The market is in an area that it hasn't seen in a little while here. Is the gap due to rollover? No, Joe. What happened was the OPEC met Sunday and decided they're going to cut production from May till the end of the year by 1.1 million barrels. So when the market opened, U.S. market opened at 5 o'clock last night, it created this gap. Weekend gaps are in most markets are relatively rare. It happens a lot in natural gas, believe it or not. Here's the continuation chart here. So here's our pennant formation. Here's the move down. Here's the move back up. 200 session that's all the way up here at $83, which kind of lines up relatively nicely with these swing highs. What about the 30-minute chart? What's it telling us? Well, again, we're out of range. We're out of balance. Anything can happen. And again, without getting up to 83 or a move back towards weekly kickoff low, I'm looking at somewhat of a random move here. I'm not all that interested necessarily in being too too involved in this until I get some daytime frame reference. And the daytime frame reference that I've written down here that I'm interested in and only interested in early in the session here is our overnight low and our overnight high. All right. Let's take a look at the NASDAQ now. All right. So NASDAQ is in a much stronger position technically than the S&Ps. It's still further from its all-time high. The NASDAQ looks like it's ready to buy. It looks like it's ready to open kind of below that late spike that we were looking at, possibly opening above in the S&Ps. Volume has been increasing on the way up. That's good. Open interest, adding another 8,800 on Friday. That's also healthy to the upside auction. My question again is, have we come too far too fast? We need a pullback or a consolidation to even out inventory before we continue this move to the upside is really the question I'm asking myself. Here's the 30-minute chart. So here's the base of that late spike. It's right about here, 13,253 to be exact. Well, it looks like we're going to be opening below it. That's rejection of higher pricing, where the S&Ps are threatening to accept higher pricing. So we got some conflicting information here. Remember to trade the market you're trading, right? We don't want to be looking at the S&P chart to trade the NASDAQ chart. Trade what you see in your market. Yes, they are correlated. They are sometimes very different, however, as far as the opportunities and the personalities are concerned. Okay. So take a look at the TPO chart here. This is, I think, going to give you a better picture of where we are. So here's where I'm basing the late spike. The market closed really well. The market left balance here and then drove higher, closed higher, didn't have time to accept. That's why we're calling this the late spike. Again, the low of that late spike is the base of it, 12,253. 12,253. Well, most of the overnight we've been holding below it. This is one of the areas that I'm looking for this market to hold, to see continuation to the upside. If we can't hold above that, the next level, similar to the S&Ps, is value low here from the overnight, these single TPOs here. If we can't hold those, then we start to look for opportunities for shorts to bring price back down to levels where the market has left unfinished business. Now, there's a naked point of control here in the day time frame. There's another naked point of control here in the day time frame. There's also the same gap here in the NASDAQ as there was in the S&Ps. So there is the potential for unfinished business to draw price lower before it can continue to the upside. And of course, the information we have due out today may be impactful in those regards. Take a look at the gold market here. All right. Balance remains. We lost 20,000 in open interest on Friday, but 17,000 of that was the April expiring contract. So we lost a little bit of open interest overall on Friday. Volume wasn't great. Rollovers ending. Last week's low and last week's high really kind of stick out to me as really kind of first levels of longer time frame execution. Now, this market has been tough to trade. It's been very kind of rangy, range-boundish, with some volatile moves in it. Take a look at the 30. Here's all of last week. Kind of a smaller range for a week, I would think. We've got the market today. I mean, we looked lower on the overnight. We're opening and did open right back in the middle of value from Friday. I find that to be very interesting. This market doesn't want to seem to take its foot off of the base. It just wants to stand on first base and not take a lead. It's difficult to trade a market like that. So this week, at least this morning, when we all know Mondays are usually not my best trading days, I'm really going to be chill as far as looking for anything to do here in gold, because we've got the market opening in range, in value from Friday. There was a late spike on Friday. Check out this TPO chart. Opening above a late spike to the downside marks rejection of lower pricing. Are we looking for opportunities to buy weakness here? That's what this would be telling us. The early nuance states opening above the base of a late spike to the downside is friendly to the upside. It's a rejection of lower pricing. But again, because we're in value and in range, it's a normal variation day here, very neutral. But with the late spike and opening above it, there is a nuance to look for opportunities for longs. But again, because we're in range and value, stay patient in that opportunity, in looking at the right place to get into that market. Okay, here's the euro. Dollar has been still coming off. It's lower a little bit this morning, but overall, we're looking at a market that's largely in balance. Volume has been increasing. Open interest is higher. There is energy coming into this market, but I don't see the level of any launch in either direction as where we're sitting right here. Here's the 30-minute chart. Very similar to gold. We took a look to the downside. There's a lot of weak structure down below here. Naked points of control, gaps. Closed the gap here on Friday. Look at the repair we did on Friday. You'll see it better on the TPO chart. But again, we're right in the middle of range and value from Friday. Stay patient. Here, look at the TPO chart. So we opened between these 2 points of control. We traded close to this one and close to this one. This was a repair day through and through. And we're right in the middle of that repair. We could repair the range from Friday before we go anywhere. Let's take a look at the 10-year range bound. At least it's found balance. I looked really hard for reasons or levels to tighten up the weekly kickoff high and low here. These were the only spots that were logical to me. The only spots that were logical. So we had to leave them there. We've got our last week's low and last week's high. Last week's low is interesting for an opportunity. We added 17,000 in open interest on this push to the upside on Friday, which isn't tremendous. It's not a large amount for the 10-year. Take a look at the 30. Got a nice little swoop going here, don't we? Almost looks like we're creating a cup and saucer. A cup and handle. We did a lot of repair. We didn't leave anything naked yesterday except for Monday, and we may head for that today. We do have a gap above, naked points of control. This market, again, was very difficult to find at closer levels for weekly kickoff levels. Here are the TPOs. We did have a late spike on Friday. A late spike. The base of it, 114.28. Where do we open? Below it. Where do we trade to? 114.28. So far, we are testing the base of that late spike. Opening below it would indicate acceptance of lower pricing. As late spike rules go, we're looking for opportunities to sell. May not work out that way. There's a lot of unfinished business above, don't forget. And let's take a quick look here at the natural gas. So natural gas, we had a pretty good volume day on Friday on an up day and added 20,000 in open interest. Is that right? Yes, that is correct. That was over several contract months. It wasn't just the front month. So we added a whole bunch of open interest on an up day. Take a look at this on the 30. That up day was a P-shaped profile, which usually means long liquidation. But it looks like we met long liquidation. In other words, short covering is what this looks like. Short covering meets long accumulation. Well, the market opened with a gap. We've now almost closed the gap. Did we finally find some buyers down here? That's what the open interest is telling us, even though this is a short covering type of profile. Here's what it looks like. Short covering profile. We have a weak low from Thursday, which remains out there. That's an unfinished downside auction. And we also have kind of a weak low, a weak high up here as well. Almost all of our visuals that traders may focus on or target are higher. So, see, a couple of questions here. Glad to be back. Glad to have you back, Diggable Seeker, Ground Zero. What's the disadvantage including overnight hours on the chart? Well, the overnight hours, if you want to take a look here, I'm just going to put up the S&P 30-minute chart. And I'm going to switch over to it. You can see that the regular trading hours are where I have the volume profiles. It's where the volume is. These are volume bars. Overnight, very low volume. Regular trading, all the volume. The market is dealing with all of the participants that are available to affect the market during regular trading hours. The longer time frame, banks, funds, all the bigger traders trade during regular trading hours. It's smaller, weaker hands traders that are trading in the overnight. So it's looking at where where business is being transacted, where the majority of the participants are available that I'm interested in. You know, this is a new thing as far as futures trader is concerned, is to be able to trade 23 hours a day, 5 days a week. For many, many years, decades, even a century, you could only trade during the open hours. And I think that there is still a large focus on those open hours, if you will, in air quotes, as the time to be involved in the market. And the longer, stronger, the bigger time frame traders are moving a lot of product, and they need that liquidity during the regular trading hours with which to transact their business. So I think that's why it's so much more important to focus on the regular trading hours over the overnight hours. I'm always looking at the overnight hours. I want to know where they traded to. What's the high? What's the low? What happened in the overnight is sometimes going to be important, of course. 41. Well, as we know. Okay. Heckle matters. I thought the late spike base was 41.3550, which on the chart, that's the M period extension that we did end up actually closing above, and I get that. But when the market really broke out of balance was in the L period. When the L period started extending the range, the market was had really fallen out of balance. So I'm focusing on that as the late spike instead of the the range extension at the top in M period. There's nothing that's perfect or finite in futures trading, but looking at the profile, it's the L period breakout that really kind of makes this market fall out of balance late in the day. Therefore, that's what I'm focusing on as the late spike. I hope that helps. Haggle matters. Junk Silver is a big fan of silver. So is my brother Rick. Joe, is a gap due to the rollover? No, we talked about that overnight dollar index dropped almost $1. CL stayed up. Well, crude has new information. There's some supply issues coming at us because OPEC is cutting their production by over 1 million barrels a day. Dad's advice. I like that name. I got a lot of good advice from my dad, and I usually put some of his advice into the group coaching session. Just join the combine. Look forward to learning and working towards getting funded. So Dad's advice: make sure you come to group coaching today. I put the link in the chat. Just click on the link, and we'll see you at 12:30 for group coaching and ask questions. That's what the whole idea is for. JD, good morning. Fred talking to Grounds Hero about the volume and the overnights and all that. We don't know what's next, really. Will, cumulative delta was negative 3,600. Let me see here on Friday. That's cumulative delta. So the regular daytime session delta was negative 2,700. Negative 2,700. But the market did have quite a big upside move, right? So even the fact that it's still negative delta indicates new buyers coming in. Got to be careful with cumulative delta, Will. Fred, responsive sellers in crude oil don't seem confident. I wouldn't either. I'm not touching that thing today. At least not without some daytime frame reference, Fred. Sigma, you trade overnight. That's fine. There is nothing wrong with trading overnight. It's different mindset, I think, just a little bit. Group Raji. Thank you very much, Anne-Marie. Thank you very much. All right. Good happy trading today, everyone. Yeah, it is a tricky indicator, cumulative delta. But if you focus on daytime frame only delta, sometimes you're going to catch one of those divergences that tells you that longer time frame parties are involved. So looking forward to seeing everybody at group coaching and Make Hogue Money in the reflection today. It's only Monday. Mondays, as I tell you all the time, historically have not been my best trading days. So I'm going to be patient today. I'm going to look for the right opportunities. I'm going to be calm, cool, collected, and clean and centered in my trading today. And don't forget humble, grateful, and creative. Take your deep breath. Get out there and profit today. Patiently. Trade well today, everyone. See you later on today. Have a good day.